We're going to have a look at this question 5 of the self-test questions. It's Kevin O'Loughlin. It's at the end of your chapter 14. As always, we do a little bit of preparation before we actually start into doing the question. So the first piece of prep is I always look at my requirement, and I see here that I have a number of accounts to create. I have to do a bank rec, I have to calculate closing inventory, and I've got the income statement and the statement of financial position at the end of the year that I have to create. Okay, so looking at all of those things, I would say that this is a 20-mark question. Okay, and you will be able to see in sample paper 1, question 2, is how it could come to you as a 10-mark question, in which case they might ask you to do, for example, a receivables and a payables control account, or they might ask you to calculate the total value of sales, something on that lines. Okay, but here we've got a full 20-mark question, I would say, so we're going to have a look through this particular one. So as always, the first thing I would do is I would check the date. So the year end that we're looking at here is the 31st of December X4. Okay, so that's the date that we're looking at, and that might be relevant to us with regard to any prepayments or accruals that are going to come up. The next thing that I would do before I start the question is I would look and I would say, okay, what do I see? Okay, what are the things that I see? So I want to try to figure out what accounts am I going to have. Well, I'm going to have bank, I'm going to have sales, receivables, suppliers or payables, phone, rent, wages and drawings. Okay, I'm listing all of these for myself. I'm going to have, again, this is car for private use, that's going to be drawings, and goods for resale, we've already got that. Inventory, so I'm putting in yellow all of the different accounts that I'm going to have. Inventory. I come down further, bank charges and discount allowed, buildings, rent, allowance for receivables, fixtures and fittings, and depreciation. Okay, now the reason that I've done that is because I personally would go off straight away and I would write up my financial statements. Okay, so I would say, right, I know what my assets, liabilities, incomes and incomes and expenses are going to be, and I would go off and I would start off writing up my financial statements. Okay, so I just want to show you that I've already prepared that here. So here's my income statement. So as usual, sales, cost of sales, and cost of sales is opening stock plus purchases less closing stock. That's going to give me my cost of sales. My expenses are phone, rent, wages, bank charges, discount allowed, allowance for receivables and depreciation. Okay, the reason that I picked them out of my question and listed them for myself and then went on to write up my financial statements, the template, is because what I'm finding is that I don't want to forget anything and I might need to do some workings. So what I'm going to do here is I'm going to make my list of every account that I think I'm going to have, write up my financial statements, and then I'm going to make sure that I have something in there for every one of those headings. Okay, so again then, just going back, I had also written up my statement of financial position template. So I know it's non-current assets, current assets gives me total assets, equity and liabilities, plus current liabilities gives me total equity and liabilities. So I'm listing that. I know I have buildings and fixtures and fittings. I know I have inventory, I have receivables, I have an allowance for receivables that I'm going to take off those receivables, and I have a bank figure. I know I have opening capital. I know I'm going to have profit. I know I have drawings because I saw it there. I know I'm going to have payables and rent accrued. Okay, so this may not work for you, but my preference would be to go through the question, highlight for myself every account that I'm going to have, and write up my statements of financial position with those accounts in it to get me started. And that basically is all about having something to make sure that you stay focused, because we've 1, 2, 3, 4, 5, 6, 7, 8. We've 8 extra pieces of information, and we have 1, 2, 3, 4, and we've 8 requirements. So it could be very easy to get lost along the way if you don't pay attention to exactly what you're doing. Okay, so I'm going to start off then. It's the first question that I've got is to create a statement of affairs for myself. Okay, so I'm going to just click in here into A. Again, I've used my list to list out all of my assets and list out all of my liabilities, of which in this case there was only one. So I'm going to make that a little bit bigger for you guys. Okay, that should do me. So I'm literally taking these numbers from the question. Remember, a statement of affairs is basically looking for your opening capital. Okay, so this here is what I'm looking for. And don't get put off by the words that they use. A statement of affairs as at that opening date is simply looking for what the opening capital is. So it told us that the value of the building was 100,000. It told us that the value of the fixtures and fittings was 56,000. The closing inventory, I think I'm going to have to calculate. Oh no, sorry, it's opening inventory I'm looking for. Opening inventory is 22500. Receivables, opening receivables and payables were 14,000 for receivables, 21,000 for payables. Bank statement, bank charges, discount allowed, building. The rent account, I had an opening debit, so I had an opening prepayment of rent of 400, and I have an opening bank that I can see here on my page 360. My opening bank is 3,500. Okay, so I'm going to total all of my assets. That comes to 19644. So that's total assets 196,400 less liabilities, and the only liability I have is payables, so I'm going to just make that a minus there. And when I total the two of those, then so that's 196,400 minus 21,000 gives me an opening capital of 175,400. Okay, 175,400, and I'm going to pop off and I'm going to put that straight into my 175,400. Okay, that's A. So that's my first one done, my statement of affairs. Okay, next we've got to do a receivables control account, a payables control account, and a rent account for the year. So I'm putting my B, C and D, those three, I'm putting them on one sheet. I'm going to do them one at a time, of course, but I've literally just laid it out for myself, my T account. So rent control. Okay, I'm getting ready here. I've given myself 4 spaces. I don't know how many I'm going to need, but I've given myself 4 spaces. Totals, payables, totals, rent and totals. Okay, so that's the way that I'm going to work that, and I'm going to do each one. So again, I'm just going to make that a little bit bigger. Alright, so what does it tell me? It tells me that my opening receivables balance was 14,000. So receivables are an asset, so I'm going to say 14, and that's my OB. Okay. It tells me that the closing balance for receivables is going to be 21,000. So I want that to be down here. Again, do you remember this from before? We fill in what we know, and what we don't know then is whatever is left. So this is my opening balance in the following month. Oops, my OB in the following month, and this is my okay. Right, so I've got that and I've got that. So far so good. So that's the opening and closing balances there. From my bank account, I can see that I had lodgements, so I had cash from receivables. Okay, so it would be debit bank and it would be credit receivables control. So that is my 263,500. Okay, and the other side of that would be bank. Okay, I've got that and I've got that. And what else did it tell us? It says that all cash received was done, opening receivables, closing receivables. Let's just double check where we're going now. So we've got our receivables, we've got our opening, we've got our closing, we've got our 21. The only other thing that it tells us is in note number 4, it says that we had a discount allowed. So again, a discount allowed would reduce the amount that your credit customers owed you. So I've got, it says, where is it now? It says discount allowed of 1,500 was granted to a receivable. Okay, so we've got our 1,500 there, and that is discount allowed. Okay, maybe a little bit wider than that. There we go. So when I total those, it gives me 286,000, 286,000. Okay, so the only figure that I don't have yet is my credit sales, and my credit sales is going to be whatever figure is left. So the 286,000 minus the 14,000 is going to give me the value of sales. Okay, so what have I done? I have put in all of the numbers that I knew, and whatever is left then has to be the sales figure. And that I should of course say credit sales, because of course we may have cash sales here. So I've got my credit sales, and that is going to be 272,000. Isn't that right? So I'm just going to total those there for a second, just make sure that I have that right. 286, yes. So 272 is the credit sales figure. So that's my receivables control. So on my receivables control, I know that my balance at the end of the year is going to be 21,000. So again, I'm just going to pop off, and I'm going to put that into my receivables as 21,000. Okay. Payables control account, it tells us again the same thing. We've got in our note number 3, we've got the payables were 14,000, and the receivables were 14,000, payables were 21,000, and the closing for our payables was 30,200. Okay, so we're going to put in payables is a liability, so the balance is going to be on the credit side. So what was the first number there again? 21,000, and the closing figure is 30,200. Okay, so I'm going to bring it back over this side. So that's going to be my opening balance in the following month, or my balance brought down. This is going to be my balance brought forward. Okay, so far they're the 3 numbers that we have. What else did it tell us? It told us in our bank account that we had made payments to suppliers of 215,800. So that would have been credit bank and debit payables. So 215,800. The other side of that would have been bank. And I don't think that we have anything else that we were given here with regard to payables. I think that's the only figure that we have. So we've got the amount that we paid, we've got the carried forward or brought forward balance, and we've got that opening balance. Okay, so once again, I'm totaling. Oops, cancel. Once again, I'm totaling, so both sides have to be the same as each other. So if I am going to take my 21,000 this time off my 246, that's going to be 225, and that's going to be my credit purchases. Okay, so that's my credit purchases. So what have I got then? I have my receivables control done, I've my payables control done, and the last one that I've got to do is my rent. Okay, so on my rent, what do they tell me this time? And I am in number 1, 2, 3, 4, 5, 6. I'm in number 6. It tells me that on the 1st of January there was an opening debit balance on rent. Okay, the other way that they could have told you that is that you had prepaid rent. So you prepaid rent of 400. So the other side of that, I'm just going to say prepaid. Ultimately, it would have been bank, but I'm just going to say it was prepaid, or it was an opening balance of 400, pardon me, but it says you're going to have a credit closing balance. Okay, so I'm going to put my credit closing balance over here. Okay, so again, that's going to be the opening balance in the following year. The following year or the following month, whichever. So I'm just going to go up and find that. Okay, and again, you can see I've just left myself space so that I can fit in. So I'm putting in the numbers that I know, and then I'm going to figure out what else is left. So on my rent, I've got credit bank 2,000 in the bank statement that they've given us in our bank account. So I've got credit rent 2,000, so I'm going to debit rent over here with 2,000. Okay, and I don't see anything else there, any other figure. So if we then are going to total those, okay, then the figure that's going to go into my income statement is going to have to be that 28, because I have nothing else on that side. Okay, so just before we go any further, I'm just going to flick back. We're looking at page 366 and 367 for these. Okay, so we've got our receivable control 14, 272, 286, and 21. Yeah. 263, 500, 15, and 21, giving us the same balance. So that's perfect. Then we've got our payables 215, 800, and 30, 200. 21, and our credit purchase of 225. That's perfect. Okay, and then we've got our rent 400, 400, 2000, giving us 28 to go to the income statement. Alright, so we're happy with those numbers. The only extra little bit that I want to do is I want to say over here we've got credit sales of 272,000. We also have cash from receivables, lodgement for some cash sales, so 20,000. And then as well as that, it says to us in number 4, no, it's not in number 4, which one is it in now? Number 1, yeah. All cash received from customers was lodged except 18,000. So there's another 18,000 there to go. Okay, so our purchases, so our total sales is not just credit sales, it is both cash and credit sales. So that is, let's just get our calculator here, 272 plus 20 plus 18 is giving us 310 of total sales. So 310,000 is our total sales. So let's see, we had our credit sales of 272, we have our balance of 21,000, and we have total sales of 310. So let's go off and see where we need to put those. Total sales of 310 there, 310,000. Opening stock purchases, let's go back and get our purchases figure then in the same way. So we've got a purchases of 225,000. Did we make any cash purchases? Again, in number 1 it says that we used some cash, 10,000, so 8 was to buy a car and 10,000 was to purchase goods for resale. So we've got the 225,000 plus 10,000 equals, and that is 235,000 is our total purchases. Okay. All right, and our rent figure is 28 with an accrued figure of 4,000. So let me see, what have I got here? I've got my balance of 30200. Payables 30200. I've got my rent accrual of 400. I've got purchases of, go back, purchases of 235000. Okay, I've got opening stock. We were told our opening stock. Let's just pop back and see what our opening stock was. 22500. Closing stock, we're going to have to calculate. That's fine. We've got phone, then we can take these direct from the bank account. So telephone 1500, we've just calculated rent as 2800, wages 14,000, bank charges, they told us their bank charges 1000, discount allowed of 1500, oops. Allowance for receivables. Allowance for receivables at the end of the year. We'll come back to that one. And depreciation, we're going to calculate those in a few minutes. So I think we have in everything that we already have. Opening capital, going to your profit drawings. Yes, yep, we do. Okay, building at cost actually 100,000. No depreciation, net book value. Oops. 100,000. Fixtures and fittings 56,000 opening. They tell us that it's 10%. So in part 8 there, they tell us that it's 10% using the reducing balance method. So 56 was the balance that we had as an opening figure, net book value. So our accumulated depreciation we're going to show has been 10% of the net book value from the previous year. Now we don't actually know what the cost of that was, but nonetheless we'll just show that. So it's minus 56. So that's going to be 50400 is the value of the fixtures and fittings. So our total then of non-current assets is 105,400. Okay, and that means that we can bring that 56 back here for our depreciation figure, and you'd be expected to do a little working for that. Let's go back and find our receivables figure then. We've got our receivables balance of 21,000. It wants us to do how much? It wants us to do a 5% allowance for receivables. Okay, 5% allowance for receivables, and if we look at that then that's going to be 21000 multiplied by 0.05 or 5%, so 1050. So again, 1050 is going to be my allowance for receivables expense, and I'm going to have minus 1050 there, taking my allowance for receivables off my receivables. Okay, so we're doing very well now. We've got A done, we've got B, C and D done, and what was E? Bank rec then. So the figure that we had in our bank was 44,200. The only adjustment that we needed to make was that there was bank charges that we hadn't recorded. Okay, so that's going to make our bank figure lower. So 43200 is going to be our bank figure, and I'm just going to pop that in. 43200. Okay, and then we can total those, and we can total those. Okay, so our total assets figure, so far our total assets figure is going to be 213550. 213550, and the only thing we don't have is our inventory. That's the only other thing that we need to include there to get ourselves to the right figure. Okay, so we're just making sure that when we do total we have that. So we've still got to figure out our inventory figure. Okay, we don't know this. We don't. Yes, we can figure out our drawings as well. We've got a drawings figure there of 9,500, and it said that we used 8,000 to buy a car for ourselves. So 9,500 from the bank account plus the 8,000 that we used to buy a car for ourselves is going to be 17,500. So that's going to be our drawings figure. Okay, so it's going to be less drawings, so it's going to be a minus also. Okay, doing well. So bank rec done. What's next? Closing inventory. Okay, closing inventory is going to be a tricky one. What they've said to us is that they've told us that our gross profit markup was 25%. So just let me pop this down here now for a second. So mark up equals 25%. Now, markup is on the cost of sales. Okay, so cost of sales plus 25%, pardon me, plus 25% equals sales. Okay, so cost of sales plus the markup is equal to sales. So 125% of cost of sales, 125% cost of sales is equal to sales. So what do I want to do then? I want to divide, because I'm looking for 100% of cost of sales. So if I want 100% cost of sales would be equal to sales, divided by 125 multiplied by 100. Okay, in this case I know that the sales are 310000, and if I divide that by 125 and multiply it by 100, that gives me calculator, 310000 divided by 125 multiplied by 100 equals. So that means that my cost of sales is 248000. So 100% of cost of sales equals and that equals 248000. Okay, so just be very aware of your markup and your margin. So do you remember we said markup is on cost of sales? So cost of sales plus 25% is equal to sales. So 125% of cost of sales is equal to sales. If I want 100% of cost of sales, then I've got to say sales divided by 125 multiplied by 100, or any other way that you're comfortable with. Okay, any other way you're comfortable with, you can do that. In this case, we knew that our sales, because we figured out our sales here, there it was. We knew that our sales was 310,000 divided by 125 multiplied by 100 gives us 248. So why is that relevant? Because we're trying to find our closing inventory. So therefore, do you remember we said that sales, no, cost of sales, pardon me, is equal to opening stock plus purchases opening stock plus purchases less closing stock. And this is what we are looking for. Okay, and again we have some of the numbers and we're looking for the others. So cost of sales we see is 248000. Purchases from our previous calculations was 235000. Opening stock we already had. We had been given opening inventory as 22500. Okay, so the difference then between these and this is going to be my closing stock. So I'm just going to total these two here. That's giving me 257,500. So the difference between 257,500 and 248,000 is my closing stock. And if I make that a minus, and I total these, it gives me 248,000, which is what we wanted. Opening plus purchases minus closing, giving us our cost of sales. Okay, so that was the relevance of them giving you that markup figure of 25%. Okay, so take your time through that. Cost of sales plus 25% because it's markup is equal to sales. So 125% of cost of sales is equal to sales. 100% of cost of sales then would be sales divided by 125 multiplied by 100. We had the sales figure, which was 310,000, divided by 125 multiplied by 100, and that gives you 248,000. We go back in then and we do our cost of sales calculation in order to give us the figure that we were missing, which was our closing stock figure. Okay, so let's go again with that. That gives us a closing stock figure. Our inventory figure there is 9500. Okay, that then gives us, if we come back in here, we should be able to get our closing stock again, 9500. That's a minus. Gives us a gross profit of 62,000. And again, if you wanted to just double check that, it should be this guy multiplied by, and let's do it on our calculator, multiplied by 25% is 62,000. So our markup was 25%, which was 62,000. And we've done that calculation just to make sure that that is the case. Okay, and then finally down here I'm going to total my expenses. Have I got all of my expenses here? Now I have. I'm going to total those. That comes to 27450, and therefore my net profit is equal to 62,000 minus 27450 gives me 34550 as my net profit. Okay, that's my net profit. Make that a little bit bigger so that you can see it. Okay, so I have my sales, I've done my cost of sales calculation, I've taken off my cost of sales, giving me a gross profit of 62,000. I've added in all of my expenses, I've totaled them to come to 27450. That gives me a net profit of 34550. Put my net profit then into my, what was it again? 34550. Okay, so my opening capital plus this year's profit less this year's drawings comes to 192,450. My current liabilities are my payables and my rent accrued, which comes to 30600. And when I total those, should give me the same number, and thanks be to God it does, 223,050, 223,050. Okay, so that is your full extent of that particular question. Let me just go back to my income statement and my statement of financial position on page 369 and 370. Okay, net profit 34550 and total equities and liabilities 223050. Okay, so that is your answer to that particular question. And there may have been a number of ways that you were able to get yourself to this figure, this closing stock figure. Whatever you're comfortable with you can use, but as I've said to you before, if I'm talking about markup, I would always make cost of sales 100%, and if I'm talking about margin, I would always make sales 100%. Okay, so what did we have? We had our statement of affairs, which is basically the opening capital figure. We had receivables control, payables control and rent account, which was B, C and D. We had the bank rec, so just altering the bank to give you the corrected nominal figure. We had a calculation of closing inventory, and finally then we had our statement of our income statement and our statement of financial position. Okay, so again, all of those numbers would have been calculatable from what they had. You would have hoped to have had all of these. So for example, for receivables, you would have hoped to have had the statements, but clearly this person didn't have all of those. So you had to, and that's the whole point of incomplete accounts, you had to figure out those numbers from the information that you did have. And typically that is where you put in all of the numbers, like in our receivables control and payables control. You put in the numbers you have, and the number that you need is the number that you don't have. Okay, so you put in everything, and the number that's left in receivables control, the credit sales account amount, is the piece that you didn't have.